Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on using supply and demand zones with support and resistance. So, what I want to do is just show you one of the ways that I use a daily time frame zone to enter on an intraday time frame, and this is come from a previous mentoring session I had with a student, and also some questions that have come up with regards to whether traders can use intraday supply and demand zones. So, for example, 4 hour, 1 hour supply and demand zones, and would they work? Now, I'm going to answer that question in a sense that you have to look at overall supply. The higher the time frame, the stronger the supply. You have the lower time frame you go into, it tends to be choppy, manipulated, etc. Right? Think about if you have strong supply that moves, 2, 3, 4, 500 pips compared to a supply zone that only moves maybe 25, 30, 40, 50 pips. What one is more powerful? And what one shows you that there is definitely a flood of buyers or sellers coming in overall throughout the whole day, for example, or even the week. So intraday traders will watch daily time frame charts. Daily traders will not watch intraday charts because they just don't trade intraday. So you're going to have more supply, more demand over a period of time, like a day or a week, than you would over a period of maybe 5, 10 minutes, 15, 20-minute, time frames, right? So daily time frames tend to have the stigma that you don't get enough trades. For example, there's not enough trades on a daily time frame, and you have to wait forever for it to come back. And I want to trade every day. So this is one way, maybe, how to kind of resolve the issue of trading activity while still taking higher time frame, charts, right, and looking at the higher time frame analysis. So we're in the pound dollar daily time frame chart, and for those of you who have watched the supply and demand video regarding how to draw supply and demand, links in the description box below. I think it's the beginner's guide to supply and demand, or drawing candlestick, supply and demand drawing candlesticks. Can't remember exactly what it's called, but I'll link it at the bottom. You'll learn basically that lower highs and lower lows, right, are areas of potential strong supply or strong demand. So here, and let's start from here. All right. So here we have a low, we have a pullback. All right. We have bit of a move, right, and then we have a bit low here, right. And really and truly, I think that is that would be the high. So you've got lower highs and lower lows being made, and that makes a new low. Right. So if you've watched the video, you'll understand that you're going to have a supply zone there, a supply zone here, and also another supply zone there. So you can still draw your supply zones in threes, or wherever there is a supply zone. And some people will get confused and they will say, well, there's so much supply there. There's from 1.296 to 1.274. There's about 150, 200 pips of supply there. If I'm an intraday trader, where will I know what area will I be trading, right? What if I'm looking to get short on this currency pair? So what you can also do, let me just backtrack a sec, and to make the chart cleaner. If you understand that you've got 3 areas of supply there, what you can do is just make it as one, encompass it as one, right? As that was the lower end of the supply zones, and that was the higher end of the supply zones, right? So it makes the chart a lot cleaner, right, and a lot easier. And as long as you understand where this whole area is supply, then you should be okay. So again, this is value. Right, so we're taking into account value. Support and resistance does not always take into account value, right? It just tells you where other traders have bought, other traders have sold, but this is proven value. And again, You can watch the beginner's guide, and I explain exactly why that is so. So as we have this wide area of supply, what we want to do is, what we can do, right, and what I do is look to intraday levels of support and resistance. Right, so if you're an intraday time frame trader, let's say for example you trade on the 1 hour chart. Now within this zone, within this daily zone of value, supply, potential value, let me just get rid of some of these arrows. What we have, right, so we determine supply and demand. Now we need to determine the supply and demand order equation, forced and willing supply and demand. But what you can do within this area here of supply is look for intraday levels of support and resistance. So one that sticks out to me at the moment is this level here, right? As you can see, right, that we zoom in, you've got a level of resistance, resistance, resistance. Got some support here, resistance, resistance, support, support. Zoom over, resistance, resistance, resistance. Bit of resistance here, which is broken through. You've got level here, which has reacted here as well, reacted there. And then as we scroll across, you can see where we've got resistance there. So horizontal, right, support and resistance within daily supply and demand zones for the intraday trader, right? And also what you also want to be aware of is half and round numbers. Now this area here occurred around the 128 round number, and I have there's a little indicator, right? You can find this on TradingView, where you have round numbers. I think the indicator is called YK round levels, right? So you know, big up to that guy who or female, I think it was a gentleman, who made the this indicator on TradingView, and I do use it, and thank you very much. And it basically plots round and half numbers, so you can see around this 1.28 round number where you get, you know, support and resistance within that area of horizontal support and resistance. And again, let's you know, move that across, and you can see where there were intraday opportunities to potentially get short on this currency pair if you believe that the dollar and the British pound. Now let's say for example this fails. Now with support and resistance, what you want to be very, very wary of is the amount of times a level is touched. Now I believe that support and resistance, the more times it's touched, the weaker it becomes, right? So this is touched recently a few times, and so I'm quite wary of this, but doesn't mean that you shouldn't necessarily get, you know, short if that is, you know, your plan. So if that area fails, right, if that doesn't produce, you know, a profitable trade for you, then I will look again all within the area of value on the daily, right? You've got another level further up, right? Probably around, looks like around this area here, right? Where you've got support, support, resistance, 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 bit of support here, resistance, resistance, resistance. To drag this across, right? And then we've got, you know, this area 1.285 area or thereabouts, right? And we can you know, look for another trade if we're looking to get short. If this breaks out, right, to the upside, we can try and look for resistance trades all within the overall area, right? And let's zoom out of this area of supply, and we do the same thing. So zoom down into your intraday time frame chart, right, or the zone, right, just plot on the daily and zoom down into your intraday time frame, look for areas of support and resistance within that area, and then look to get long or short and apply the supply and demand order equation, dynamic, horizontal, and diagonal support and resistance to those areas as well, if you do get any of those in conjunction with value, right? So also I have another video explaining how to apply this and why this is important: forced and willing supply and demand. So you're using overall daily supply or demand, and then looking at intraday trades within those areas. If support and resistance isn't within those areas of daily supply and demand, then I'm not looking at that area, right? I want to look at what is happening on the bigger picture. So hopefully that helps. Hopefully that gets you more trades on an intraday and shows you how to use daily time frames and get in a bit more trades if you are looking to trade the intraday time frame. So if you do have any questions, just email me at info@trading180.com, and don't forget to like, subscribe, share, check out the other videos as well I have on the channel. And if you do want me to make a video on anything and I know about it, I will endeavor to make a video for you and maybe answer some questions as well with some video analysis. Also, before I go, right, a bit of fundamentals here. So just because we've seen this area here doesn't mean I'm trying to get short. And many of you guys will know that I am, short on this currency pair. I haven't entered short yet, and the reason why is because we have some fundamental news coming out, and the fundamental news at the moment, it's 3:40 in the afternoon, but we have some Fed Chair Powell speaks, and what he's going to be talking about is going to be some policy news on the Federal Reserve, which could move the market. So depending on what he says, if he's hawkish, if he's dovish, could obviously move the pound dollar. But also we have tomorrow, Friday the 11th of January, GDP month for month for the British pound, and that is expected to be 0.1. If it comes in 0 or negative, then the pound is a sell. But also you also have to be aware of at 1:30 London time, you have the dollar CPI, and it's expected to be at minus 0.1 monthly CPI, consumer prices index. If that is above the if that is at probably 0 or even at 0.1%, then and this is bad, then for the pound, then you want to get in short on that dollar pair. But depending on obviously the data and what comes out, and obviously as well, Fed Chair Powell speaks, if they're hawkish dovish on interest rate hikes, and if they're employing a wait and see approach, right? So wait for the data to come out. Yeah, potentially if you are going to enter, pre news data release, what I would probably suggest is you enter maybe half a position, right, and then, or a quarter of a position that you normally would, and then what you can do is add in as the news starts to come out and potentially go your way, right? So any surprises in the market tomorrow, I'll be on the lookout. Doesn't mean I'm going to be entering this trade, depending on obviously what comes out on the news. So hope you enjoyed the video. Let me know your feedback, any comments, and I will speak to you guys soon.